Making money isn't actually that complicated. You can study all the economics and finance textbooks you want, but right now, it boils down to one simple move: waiting. Specifically, we are waiting until May 15th, 2026. Why that specific date? Because that is when Federal Reserve Chairman Jerome Powell's term officially ends. Once he steps down, the barrier between the Federal Reserve and the White House dissolves. The next person in charge will likely be a yes man to the administration, obediently lowering interest rates and printing money regardless of inflation risks. This will send a tsunami of cash flooding into global assets, causing prices to surge. So, the logic goes: invest now, close your eyes, and in 3 months your wallet explodes with cash. Right? Not so fast. Welcome to the Stewardship Finance Academy. If you are looking to master your money and navigate the financial storms ahead, you are in the right place. Standard economics says rate cuts make borrowing cheaper, boosting spending and prices. But the US government has proven something strange. Despite recent rate cuts, inflation has actually decreased, dropping from 3% to around 2.7%. Here is the paradox. US interest rates are lower, yet people aren't borrowing or spending. Why? Let's do the hard math. 2 years ago, banks paid you a juicy 5% interest. Today, after cuts, that rate is roughly 3.5%. Now, ask yourself, with rates dropping, will you stop saving and start borrowing to invest? Consider this scenario. You have $10 million. Option A, cash. You hold it under your mattress. With 3% inflation, you lose $300,000 in purchasing power. Option B, deposit. You bank it at 3.5%. Option B, deposit. You bank it at 3.5%. You earn $350,000. After deducting inflation, you still profit $50,000. Now look at option C, borrowing. Even with rate cuts, the bank charges you a spread, so borrowing costs at least 5%. If you borrow $10 million to invest, you pay $500,000 in interest up front. To just break even, your investment must earn 5%. But in a deflationary environment, where asset prices are stagnant, earning that risk-free is impossible. Most people do this math and realize it's safer to lock in the 3.5% savings rate before it drops further. This is human nature. When rates drop from 5% to 3.5%, you don't rush to spend. You rush to deposit money to lock in that 3.5% before it falls to 2% or 1%. You regret missing the 5% window. So, ironically, moderate rate cuts make people save more, sucking money out of the economy and suppressing inflation. But what happens if the new Fed chair drops rates to 0%? Imagine this. You deposit money, the bank pays you nothing, 0%. But inflation is still eating 2.7% of your wealth. You are guaranteed to lose money every single day. Suddenly, you must spend or invest to survive. In 2020, the Fed cut rates to 0% and printed trillions. The result? Inflation hit historic highs. Who benefits most from this currency destruction? Debtors. If you owe $10 million and inflation destroys the dollar's value, you pay back your debt with cheap money. And who is the biggest debtor in human history? The United States government. The US government needs inflation to inflate away its debt. But there is a darker play here. History is repeating the 1970s harvest. In 1972, the Nixon administration pressured Fed Chair Arthur Burns to keep rates low. The result looked like a boom. GDP surged by 5.3% in a single year. It felt like prosperity. But it was a lie. Shortly after, inflation skyrocketed to 12% and 14%. The dollar lost 50% of its value in a few years. People had more money, but they were poorer than ever. This is the stagflation trap we are walking into again. In 1972, fed by loose monetary policy, US real GDP grew 5.3%, but this fueled the Great Inflation era where CPI hit double digits by 1974. This historical context is crucial, and it's easy to forget the details once the daily news cycle takes over. If you don't want to lose track of this harvest blueprint, hit the like button right now, so we'll automatically save the video to your liked playlist so you can easily find it and rewatch it when the market starts getting volatile. The most destructive force today isn't a nuclear weapon, it's the Federal Reserve. In 2022, a single sentence raising rates sucked capital from around the globe back into the US. Why? Because the US paid 5% risk-free. Look at Japan. When US rates rose, the yen collapsed. American investors like Warren Buffett saw this. He borrowed cheap and then bought massive stakes in Japan's 5 largest trading houses, specifically increasing his positions in Mitsubishi Mitsui to over 10% in late 2025. In August 2025, Berkshire Hathaway disclosed it had increased its stakes in Mitsubishi and Mitsui, taking advantage of the yen-dollar spread. They tried to do the same to China, forcing capital to flee the RMB for the USD. An estimated $3 trillion left China. This triggered a real estate crisis where prices in Tier 1 cities fell significantly. Now comes the reversal. As the Fed prepares to cut rates in 2026, that capital will leave. China is already dumping us debt. In November 2025, China's holdings of U.S. Treasuries dropped to $682 billion, the lowest level since 2008, data confirms. China reduced Treasury holdings to $682.6 billion in November 2025, continuing a long-term divestment strategy. If the Fed cuts rates to 0% and China refuses to buy U.S. debt, who funds the government? The dollar faces a liquidity crisis. We are approaching a critical turning point. We will be tracking these liquidity metrics every single week, so make sure you don't miss an urgent update when the data shifts. Make sure you are subscribed and have notifications turned on. You need to be the first to know, not the last. Don't bet on the Fed saving you. You need a system that profits regardless of their policy. Most people panic when volatility hits, or they rely on gut feelings that get them crushed. What you need is an unsinkable, holo-systematic approach that works whether the market crashes or soars. This isn't just theory. Our team has used this exact system to help thousands of students turn losses into stable cash flow, even in uncertain times. Whether you are a total beginner or an experienced trader, you need a plan that is harvest-proof. We are offering a free stock investment masterclass to teach this exact framework. In this session, we'll show you how to an autonomous portfolio that generates profit while you sleep. Spots are strictly limited and fill up fast. Click the first link in the description to register for the free training camp now. Stop guessing and start building. Here is the final twist. The US government is no longer waiting for the Fed. They are rewriting the rules to seize control of the money supply directly. On January 8, 2026, President Trump explicitly ordered Fannie Mae and Freddie Mac to use their emergency reserves to purchase $200 billion in mortgage-backed securities MBS. He bypassed the Fed entirely to force mortgage rates down artificially. President Trump directed Fannie Freddie to buy $200 billion in MBS on January 8, 2026. Utilizing GSE cash reserves to intervene in rates, Congress is pushing bills 381, 10% credit card interest rate cap act introduced in the 119th Congress. This would legally force banks to cap consumer rates, destroying their profit margins, but flooding the system with cheap credit. S. 381 119th Congress remains active in the Senate Banking Committee as of February 2026, representing a legislative push for rate control. The government is desperate for inflation to survive its debt. The Fed is desperate for stability. This clash will lead to a collapse. As history teaches us, only after the collapse, when assets are dirt cheap, do the real fortunes get made. The next few months until May 2026 are critical. We are looking at a potential reset of the financial order. Will you be the one getting harvested or the one building generational wealth? If you want to survive this, make sure to watch our videos. And one last thing. This isn't just about your money. It's about your family's future. Don't let them be the ones who get harvested because they didn't know. Share this video with your friends and family right now. Help them wake up before the harvest begins. Thank you for watching. See you in the next video.